Hello, dear friends. I hope you all are good. I finally had some time to put together this little presentation on the particular topic of automated trading systems and also semi-automated approaches. As you know, I love to be very concise, to put a lot of complex information into very simple terms. I hope you appreciate that. Let's get started. Okay? First of all, as I wrote here, it should be understood that if you work on automated systems, this will be good even for your purely manual trading. Okay, that's why I recommend anyone who's involved in FX trading to consider that. Even if you already know that you will always be a manual trader, you will learn a lot in that process. Even if you will never ever create a profitable strategy, which is automated, you will learn a lot for your own manual trading. Don't underestimate that. But of course, in the best case, you also create a strategy which is good, at least for some time. Now, for example, I should elaborate a little bit on this. Many people think that their approach is profitable. They may combine some indicators or whatever, or look for certain price patterns, and then they're shocked when they actually go and test the system and it completely fails. That is a big fallacy. Okay, a system can look good visually, but often the data speaks a different language. You need to be careful. It's not enough to visually backtest anything. Okay, you will learn that quickly if you do proper testing. Then also, if you manage to create a good strategy, even if it has weaknesses, by observing how the thing trades live, you will learn a lot for your manual trading. That means most of the time you will see that human traders tend to overtrade. There are necessary waiting periods. Okay, sometimes, some days don't allow for any trades. You will see that a good strategy has some balance regarding a lot of factors. Okay, it will not be unbalanced. It will not try to make 5 pips and have 100 pip downside and all these things, which are ridiculous. We come to that in a second. Okay, so observing how a strategy like this trades itself can be quite a lesson and has the potential to improve how you trade in your own manual approach. And as I wrote here, it includes trade frequency, position size, stop and target placement, trade management, filtering, etc. All these factors can be analyzed when you see how the strategy executes trades. I also would like to stress this point here. For some people, a semi-automated approach makes sense. For example, if you have access to our Market Causality live stream and you have a system, you may decide, okay, my system is a range trading system. Now their position bars on both sides are activated. Or you may have a trend trading system. You wait until, for example, there are loads of longies in the market, and then you activate your trend system so it catches some trend moves against those money positions. Or you may even tell your bot to only trade into one side. Let's say the short is in the market and you only allow it to buy. There are many ways you can use the market causality as a filter, where every few days, you adjust your bots or you switch it off on. I show you later on what I personally do. I don't really do that. I do purely manual trading. I do purely automated trading, and then I do a semi-auto approach as well, which means that I let the bots trade, but I may manually close some trades based on the market causality. I'll show you that later. Okay, so take a step back, please, and really think deeply about what a system actually is. I always say a trading system is nothing else than a sequence of trades at the end of the day. Think about that. Yeah? We're talking about a set of trades, some of them being winners, some of they being losers, a sample size, trades which are opened and then closed as a sequence. That is basically what a system boils down to. So we talk about a period of time, a number of trades which are implemented in that period with respective outcomes. That's what we talk about. And if you take this to a very fundamental level, those factors are the important ones. Win-loss ratio. How many of those trades which were made in that period were winners or losers? How much did you win or lose per trade, and then on average? How often was a trade actually done? So the trade frequency, we come to that also. What was the max loss per trade? Yeah, this is in particular important for all these cheat systems, which may take a few pips in profit but have a massive downside. We'll come to that. And then what's the average drawdown versus the average expected return? That is a very important factor when it comes to a set of trades, because if your return is 4 or 5 times higher than the average drawdown, things look good. Okay? Now, as I wrote here, some of these factors are changing rather than constant. That's what many people do not understand. So when it comes to win-loss ratio, let's say your system allows for 65% win-loss. So 65% of your trades are winners, the rest is losers. This often is not a constant value. It will go down to 55, it will go up to 70, etc. It will move, because guess what? With each trade, going against you or in your favor, your overall win-loss ratio of the sequence of trades which were already implemented changes. Guess what? You understand? So this is not a constant factor. Trade frequency. Sometimes the strategy may be able to give a lot of trades in a month. Sometimes it will not. Okay? There are slow months, there are faster months. You need to really remember that those factors change. Okay? Then here, like I said, the probability distribution of the collective trade outcomes is another story. That's what also many people, if not most, completely misunderstand. If you have a 60% win-loss ratio, okay, but once you switch on the system, there's a big drawdown and you have 20 losing trades in a row and your account goes down, you know. But if, let's say, for the 6 months after, you know, like most trades, like 60-70% are winners, you can still have overall like 60% win-loss ratio. But that 60% win-loss ratio does not protect you in any shape or form from such a drawdown and from a scenario where losing trades come together in a bundle, as it is the problem with many systems. You understand? Most systems will have some kind of drawdowns, but just because your win-loss is okay and your risk return is okay, that doesn't mean that, you know, you will not suffer from the drawdowns. And if you are unlucky or you switch on the system in a bad moment, so to speak, and the drawdown comes straight at the beginning, you know, even if actually it was a good strategy, you may think, oh, it doesn't work at all. And vice versa. Understand these points. I'm shocked how many people do not understand those very, very basic considerations. And all these things apply 100% to your manual strategy. Make no mistake, okay? When you do your manual trades, do not ever disregard these things. Have awareness towards these factors. That's what this game is about. You don't need to win every trade, okay? You don't even need to have a great win-loss ratio, but you need to have balances at least and an edge. The edge is a market causality, for example. Okay, let's talk about, sorry, I covered this. What's the advantage of trading bots? So these strategies, they trade without emotions, obviously. They implement a proven edge. Well, if you were able to prove that it actually has an edge, we'll come to that now. They can trade 24/7 while human traders need to sleep. The risk is capped if you use balance stops, okay? You get stopped out or not. And if the trades are closed before the weekend. Fast calculation of complex mathematical factors. If your strategy is very complex and you have very complex filters, those calculations obviously made by the computer, you can't make those as a human when you sit in front of your screens. There's no time for that. Perfect addition to manual trading. That's what I personally love. I mean, as you know, I do a lot of manual trading. I'm a manual trader, but I love to have my bots running by the side. It's so good on so many levels because, for example, if I need to have patience and I need to wait for a good manual setup and, you know, I feel emotionally less pressured because I know that my bots are running. They may catch a trade or they may do something while I'm waiting for manual setups. That alone, for example, is very, very good. And any experienced trader will confirm this because you feel there's something cooking. There's no need to do anything. There are also disadvantages. Like I wrote here, human brain can analyze and combine more factors. So let me explain that further. A human brain can do a lot of things. And to translate all of this into code is no easy task. Yeah. For example, you may look at the chart, different time frames, at technical factors, okay, at patterns, trend lines. You may also look at the news flow, at fundamental analysis, and at politics, okay, at world events, how different markets are correlated and all this. That cannot be easily translated into a code, all right, even though some hedge funds are doing exactly that, but very few. So that is sometimes an advantage when it comes to the analysis, not the trade implementation, the analysis. And obviously, with the market causality, we know if you sit there, you analyze a market causality as a human, an experienced causality trader will outperform pretty much anything, okay? If you know, okay, the market went up, longies are on the market, they took the upper stops like a short, it's no rocket science, okay? Watch this channel if you have no clue what I'm talking about. Next point, some drawdowns can be reduced or avoided. Yeah, as I said, so rather than having a statistical program running through the ups and downs, if you are a very experienced manual trader, you may outperform it because you know, okay, now there's a period I should trade. Let's say 3-4 weeks ago when we had all these easy money trades, the squeezes, the euro dollar down moves against the longies over weeks, you make easy money there as a manual trader, okay? You will outperform any statistical approach which tries to place trades, but it doesn't, really consider all these different factors. Now, of course, when you design your strategy, you should take some of those general principles into account, such as stop hunting and position hunting and so on, yes? But as a human trader, you can actually, live trade this leading information directly. Okay, so as I said here, manual trading with market causality can outperform the bots. If you have access to the live stream and you practice enough, you will outperform that, no matter whether you do long-term or short-term trading. Trade frequency can be variable. Therefore, also the expected return. That's very important, okay? This topic is very important. Trade frequency. How many trades does the strategy actually launch and allow for? This changes. Sometimes there are many trades, sometimes there are not so many trades. It's no different in manual trading, okay? It's pretty much similar. But if you have a purely automated strategy and it just runs, sometimes even there is an easier period on the manual side, it may not do as many trades, etc. Then the big one, automated strategies can die without warning. If the market change, let's say the market conditions change a lot, and from our perspective it means, let's say, suddenly the markets are more whipsawy, there is more mixed money flow, there are stops on both sides, there's less bias, and then suddenly the markets change a lot in terms of the average range, or the opposite, they're completely out of the range, overstretched, and they do snap moves like now in this market period. If something more fundamental than that changes in the markets, and that normally happens every few years, there is a risk that a strategy may die. So that means even if it was well designed, there is a risk that it can completely go down and lose. But obviously, if you made money until then, you will have a point where you can decide whether you want to deactivate it or not. And if you designed it well, it has a good chance it will perform for a few years, maybe half a decade, maybe more. Here, commercial bots, my clear warning, okay? Those bots you can buy on the internet, don't do it, okay? First of all, use common sense as so often. If you have a really great strategy, why would you sell it? I mean, look, unless you sell it to a very low number of people at high prices, and you know how much money, how big their accounts are, so you know that your strategy will not be dying in a self-fulfilling prophecy in that sense. You understand? Popular strategies will not last long. Why? Well, we know best why. If all the dumb money uses a certain breakout system, they all buy at the same time, guess what? We get the green, we get the smart money algos detecting that and pushing the price down against them. As simple as that. The more dumb money will trade such approaches, the less such strategies would work to the point where they completely die. So that's one factor, yeah? You need to consider that if you have good strategies. I'm not saying that, it makes no sense to not sell them. Okay, maybe it does. But certainly you don't want to, reach a mass market, because that could even change the markets, obviously. Yes? And why would you not rather collect capital and trade this yourself, unless, of course, there's a handful of people or very low number with limited accounts where you sell at high prices. But even that does not really make a lot of sense normally. Okay. One particular warning: be very careful, because most commercial EAs you can buy on the internet, even if they work for some time, they are based either on martingale in one way or another. So the bot may place a trade, it goes against it, it places another, goes against it, it places another. So in 7 out of 10 cases, the price does a pullback and they get out. But then in a few trades, it's all lost. Be careful. Or pyramiding, it may trade aggressively into one direction, and if it catches the trend, it does a jump up. Otherwise, it gets completely whipsawed. Or it may not use any stop, which is really, really unfair. There's one particular gentleman who sells EAs on the web and made millions with that, and most of those EAs just don't use any stops. Now that's kind of cheating, basically, because I can show you hundreds of strategies which look good, on paper, but which do not use any stops. Which means a single trade in the wrong direction can blow the whole account and the whole trading in one go. This is cheating. Okay, don't cheat yourself. Or they're grid-based. Okay, the market goes one direction, they buy. It goes to the lower direction, they sell. It goes down again, they sell. So the strategy just trades aggressively into each of those directions, and often it gets out at a net profit. But again, these are all very fragile strategies which are prone to black swan risk. You need a single big price move to wipe all this stuff out in a second. Don't be a sucker, okay? Don't create those kind of strategies. Don't buy those kind of strategies. Don't use those kind of strategies. You are cheating yourself. You get cheated by the seller, and you're cheating yourself, because this is not sustainable. You may have a nice period and make some money over 2 or 3 months, and then you quickly blow the whole thing. Don't be so stupid. Even some high frequency strategies are sold online, which place like 300 trades in a day. These are the ones which blow first. Okay, don't ever touch this stuff. And we have some real scammers out there, even some who fake backtest. Okay, it's shocking what they do lately. They even incorporate historical signals into the bot, so that when you do your testing, even tick database thing, you think that the strategy goes up and makes money, while it was all fed into the code beforehand, all the historical trades. Now that's real fraud, and it exists. Be careful. Even on big popular websites, under the top 10 selections, you find exactly that. Okay, that's the standard. All right. So let's talk about what you should do. I recommend, first of all, that you create your own strategy. Why? Because then you really understand each single component. It's difficult to explain, but it's necessary. You need to understand 100% what you created, how it works, okay, why it works, and when it doesn't work, what are the strong points, what are the weak points. There are no shortcuts. You need to understand that. Not in life, not in business, not in trading. Okay? You need to walk the walk. And this is a multi-year process, make no mistake. As I will show you now with my own bots, it took me 4 years or something like that to create good strategies. 4 years, think about it. Most people would not be willing to do that. But I love that stuff, so I have passion for it. So I love to do backtesting at the weekends. It gave me joy. But there's no shortcut. Okay? So this is not get rich quick. This is not, I create a little bot and I make money while I'm sleeping. That's not how it works. You will lose all your money. Okay? Now, the strategy needs to be designed on the basis of smart principles. As you know, we know best how the market works, how the market manipulation is conducted, how the stop runs, the position runs, the counter moves, how all this is done. It's a good idea to kind of incorporate those principles, at least generally, into your approach. And even if it's a breakout approach or pullback approach, whatever it is, you should take those kind of factors into account in some way. Yeah. Make sure there are no errors in the code. It's very easy to have, incorrect code or errors. It will show up, even especially if you test. Okay, so once you create your strategies, you improved it, and you're ready to, do longer term back tests. Now we're talking. Okay, so first of all, let me explain that also. You need to use tick data. Okay, you need to use tick data for your backtesting. You can't just use a normal MT4. It's a nasty trap. It will do like a simulated algorithm. This is not realistic. So you need to have the tick data. You need to download it from different brokers, and then you can backtest your strategy, and you have also the options to do it under realistic conditions. So we're talking variable spread, slippage, commissions. You need to take all these factors into account. And the more short term you go, the more lower time frames you go, the more relevant these factors are. Okay? So don't fool yourself. Do it correctly. Okay? Again, no shortcuts. Test under realistic conditions. Then you will know how the strategy performed. Right? Okay, so once you managed all that, it took you a few years, but you managed to create a handful of good strategies which seem robust. Congratulations, but then you need to go to the demo live trading. That means you should open a demo account, preferably again at different brokers, take the same bot, the same strategy, with the same settings, the same input, and let them run. And let them run for some weeks, a month. Then you will see whether the results are reflecting the results from your tick data backtesting. Okay? If not, you know that something is wrong. If they are pretty similar, even if they're slightly worse or sometimes slightly better, you know you're in a good way. Okay. Once you have passed that stage, then we can talk about live trading. So after these few years of work and serious commitment, if you passed that finally and you found things that kind of work for you, which are robust enough that you have confidence in risking capital on that, then we can talk about live trading. You can first open just a little account, test with little real money, and then if that reflects the same or similar results like the demo results and the backtest results, you know you have something that works. Okay? Now that doesn't mean that it will work for the rest of your life, obviously. Yes, but it looks good, like in terms of having that running live and making money by the side next to your manual trading, etc. So what did I do? Let me talk a bit about my own automated and semi-automated trading. As I said, it took me around 4 years to create around 9 strategies on 3 different time frames, 6 different currency pairs. They work full auto, as I show you now with the results. And understand, so I use those strategies full automatic, they just run without intervention. And then I have a separate account where I use those strategies semi-auto. That means I will manually decide, for example, if the bot opens a trade, I will manually decide whether I want this trade or not. If not, I close it. If I like it, I'll leave it. Okay? And obviously I use the market causality. If I, for example, let's say the bot wants to buy euro dollar and I see the market is full of longies, I will not allow it to buy euro dollar because I know most likely this will be a losing trade. That I do in the semi-automated trading, okay? So it allows me to actually smoothen the drawdown even more. In the fully automated account, it just runs, obviously. And so I use, these strategies have complex filters, such as fractal filters, etc. So you can imagine it uses a high number of filters, many lines of code. Okay, this is not just like, a few lines of code. It uses a smart position sizing algo, so sometimes they will trade more bigger positions, sometimes smaller positions. Understand that, however, if that's the case, there is a fixed position range. For example, 5 to 20 lots. It can trade between 5 and 20 lots, not above, not below. Okay? It's not based on any grid or hedging or martingale cheating stuff. Every trade has a balanced stop. I don't trade automated without a stop. And the equity curves, as you can see now, are pretty robust. Now, let me explain that point. I was able at some point to create very good strategies, profitable strategies, but then most of them didn't have a great trade frequency. That was the biggest challenge for me in my last year of development. I had to find ways to increase the trade frequency, because to be perfectly honest, if I commit myself to dedicate computers running 24/7, yes, and office space and machines which will most likely burn at some point, internet, electricity, etc. And if the thing trades maybe once per month, that doesn't feel right. For me personally, that doesn't feel right. There are people who do that, and it's absolutely fine. Don't get me wrong, okay? They have robust strategies. It may do 3 trades in a month. On average, it works good for them. Nothing against that. For me personally, it didn't feel right. My condition kind of was, okay, can I not only create a good strategy, but it needs to do a certain amount of trades. So in the end, I was able, with all 9 together, to reach around 2 trades per day. That means on one day, it may not do any trades. On the next day, 4, 5, 6, then 2, then 1, then 4, then 0, 0, 2, 0, 4, 0, 5, 6. You see, it's not normally distributed, but on average around 2 per day, and I'm very happy with that. Okay, because when I manually trade and I see on average that there are trades launched by the bots, it makes me happy. Sometimes I may even replicate the trades manually. So it means if I see, okay, the bot excuse me, wants to buy dollar yen, and I see shorties dollar yen, I may replicate the trade manually. For me, it's a perfect combination. Okay, the manual and the auto. I love it. It has improved my trading a lot. Okay, enough talking. Let's talk graphs. So here you see the tick data backtest curve over 5 years of one strategy. I will show you a few strategies of mine. As you can see, this is amazing. If you reach anything similar to this, it seems to be a strategy worth going live with and investing in. Okay. Now, let me emphasize. Okay, it had this initial drawdown. That was nasty. So that means that over a few months, the strategy performed well. Then there was a bad period where it not only gave back all the profits, but it went even below the initial amount. Okay, so that's quite a steep drawdown. People may think here, oh, it loses, it's a losing strategy. No. If you run a strategy, you need to be so confident that if that happens, you just let it run. You don't stop it. Okay? You need to have the confidence. That's why you need to know exactly what the strategy does. You can't take someone else's. Okay? Because look at that. If you stopped here, you missed the best years ever. Okay? Well, it literally just went up in a straight line, more or less. Some periods may be a bit flat. Some may be fantastic, where just wins and wins and wins. Some may have a little bit of drawdown over 1-2 weeks. And then, the thing continues. So let's look at the numbers. So you see, this one in particular has almost 60% win-loss ratio. But this together with an average profit per trade of around 3.12K and average loss of 3.34 or 3.35K. So that's very balanced. If you are able to get this kind of trade frequency with this balanced average win-loss, you have a money maker. You have a money-making machine. And look, this is reflected. The profit factor 1.39 and expected payoff 519. Okay. And look at that. Drawdown 4.73 maximum. Which translates into almost 50K. Yeah, while it made more than 160K. How cool is that? More than 3 times more profit than drawdown. If you get those kind of values, it's amazing. And pay attention, 99.9% modeling quality. Okay, that's very important. I show you the live results also, don't worry. But you understand that these are the numbers you want to achieve. Maximum wins, maximum loss, and also maximum largest profit and largest loss. This is very important. You see again that the strategy is balanced. You see the largest profit around 10.85k, the largest loss 12.13k. We're not talking about, you know, the largest profit 5k and the largest loss 10k. You understand? So you see that this strategy is very superior. Okay, next, let's look at the next one. This is also a beautiful one. It does slightly less trades. It has a bit of flat periods. It also has drawdowns, like you can see here, where it just went down for a good 10, 15 trades overall, with a little pullback in between. But you know that if it has its nice modes, it will just make money. Yeah, sometimes almost every day. You understand? If you are able to reach these kind of curves over such a long time period, I mean, think about it. Half a decade with all the events, yeah, with the financial, like with Brexit, with flash crashes, with gaps, with all kinds of things. If you reach these kind of numbers, which took me 4 years around that, you know, you're on the right way. But obviously I know exactly if something is wrong. And this translates also. Let's look to sorry, so win-loss ratio slightly higher, 70.53%. That's amazing. Average profit 1.5k, average loss 2.6k. You see, so on that respect it's a bit less balanced, but that's also reflected in the lower trade frequency. Okay? But as you can see, look at the drawdown. 23.87k versus 83.4k profit. I mean, these are really good values. Understand? Almost times 4. But it's still balanced, you understand? When you talk about the largest profit, 6.1k, largest loss 10.7k, 10.8. Very nice. Next one. Again, this is of course a beautiful curve here with massive profit, then a flat period, and then a very steady low drawdown period. But look at this also. Again, yeah, there is also this drawdown period where the strategy went first up, everybody's happy, then goes flat, goes down even below the initial value. You understand? And then it had this massive move. 56.56% win-loss ratio, so lower, okay, just above half of the trades are winners, but 838 trades, so higher trade frequency, 4.85% drawdown, you know, which translates to 50.4k roughly, but this against the 250k profit. Okay, so times 5 almost. How good is that? You understand? So this is really what counts, and therefore, of course, you have an expected pay of 298. Let me also show you this one. As you can see, it's a different approach. Okay, and understand these are different pairs, different time frames, different strategies, completely different. Okay, different entries, filters, trade management, position size, algo, etc. Okay, these are all particular strategies. Here we had quite a long flat period, in all fairness, you see. Like over several months, it just, you know, went flat overall. Understand that, okay? That's why, for example, I would not just trade the strategy alone. But in a package with other strategies together, I may have some diversification benefits out of this, you see? And then at this beautiful period where I just made money with only very little drawdowns. How does this look in numbers? 61.82% profit trade, so win-loss ratio. Look at this average profit 2.2k and average loss 2.1k. This is amazing. Okay, that's what you want. Largest profit 11.2k, largest loss 11.2k. You understand what I mean? Drawdown 3.53% versus 156.5k in profit. 446 expected payoff. That's a money machine. That's what most people would call a money tree. The strategy is complex again, okay? It doesn't use, you know, moving averages and Bollinger or something. We talk about very advanced stuff. But obviously, if I would talk about this, we could talk about 10 hours. I'm showing you the results. And it's not very relevant because, you know, you need to develop your own style, your own approach. Okay, so let me do what I preached. So, of course, let me show you the results. Boom. Surprise, surprise. This reflects the tick data backtests, of course. You see? 66.67% win-loss. Drawdown 1.61%. Profit factor 1.39. Net profit 25k versus an absolute drawdown of 12k. Look, at the beginning goes a bit back and forth. Boom, and here the truth comes out. After around 80 trades, the truth comes out. You understand? Next. There we go. Yeah? You can already see over 211 trades. Boom. Oh, this doesn't work. Boom, it comes. Small drawdown. Boom. This is how it looks when you have the thing running. And these are beautiful results. Yes. So, when it comes to my own approach, again, to summarize, okay, the manual trading, the market causality, the full auto, and the semi-auto, that's the three things I do. Some people will prefer manual trading plus semi-auto, but semi-auto in a different way. Like I said, not closing trades manually necessarily, but telling the bot to trade or not trade, so activating it or deactivating it, depending on the market phase, or even telling the bot only buy, only sell, or telling the bot trade less position size or more position size. These are all different ways you can trade. You need to find your own approach which you prefer, which fits your personality also, by the way. I like to do proper manual trading plus proper auto trading plus just selected auto trades. All three together allow me to manage the portfolio well. Because here I will have nice jumps if I have those easy money trades like recently euro dollar. I can just cash in pips and pips and pips after days and weeks in the easy money trade as a massive bonus. Then I may keep it small on the manual trading, and the auto trades may catch some nice moves which I wouldn't normally trade manually. You understand? And then to top it off, I may have phases where I say, this trade I don't want, I kick that one out. But on a separate account, you know, I don't want to mix this up. Do not mix these things up. Okay? All right, so what's my recommendation to you? Develop your own bots. Stay away from commercial ones as a general rule. Use tick data. Use realistic conditions. Prepare for a multi-year process. Okay, you will not just create something good in 1 year. Forget about that. You must be in there for the long term. That's a natural selection, so to speak. Your system must pass at least 5 years of price action under realistic conditions. The more the better. Okay, so like I showed, most backtests I showed you now, they were from end of 2014, beginning of 2015 to today, 2021. You understand? That's how you have to do it, you know? Because these are all kinds of market phases where you have rangy markets, trending markets, whipsawing, news moves, etc. You want to know the truth. Don't, cheat on yourself, okay? Don't convince yourself you're something which works, which actually doesn't work. You must go through the process. So if you pass the back test stage, and most of you will not pass it, okay? They will again and again fail. I did that. I failed for 2 years or so in my back tests, okay? I invested hundreds of hours, thousands of hours into that, and it failed. The curve went down, or went up, down, until, the strategies were good enough to give more consistent results. And, were fine-tuned, but not over-optimized, okay? You can't just curve fit your strategy. That's not a good idea neither, because it will quickly die. Don't do curve fitting. Don't try to force your strategy on the price data, you understand? Then you're also misleading yourself. Do it properly. Once you have passed the back test stage, and then you have passed the demo stage, and then you've passed the little live test stage, they have something which will make you money. Use it to make money, and then be aware once something dies, one of the strategies or several ones, and switch them off. Okay? There are no shortcuts. There are no shortcuts in life, in business, and certainly not in trading. Okay? You cannot buy someone's strategy or copy someone's strategy or do whatever. It doesn't work. Certainly not with manual trading. You can take influences from others. Yes, that you can. I mean, look at all the knowledge I've provided you for free on the market in FX. Look at what I showed you, how positions get hunted. Nobody has ever shown that in the history of mankind. Okay? Look at this leading information, the leading tools that actually works. Nobody can offer that to you. That's a lot of knowledge you can use already for free. You understand? Walk the walk. Don't try to be one of those guys who tries to, get rich quick. Think in the long term. Be consistent, make mistakes, improve. Don't repeat the mistakes. Adjust, be adaptive. The same things which are required for your manual trading are required for automated trading. Okay? That's what works. If you really want to do that and you want to go down that path, you need to go through all of that. Everything else is just, guys who found some toys, If you buy, $100 EA on the internet and you think this will make you rich, I mean, come on, use some common sense. Okay, don't be a sucker. Don't be the dumb money. Strategies can die if too many dumb money traders apply these, okay? Even if something works for some time, it will quickly die. Last but not least, that's very advanced and I will not elaborate, but some strategies are not scalable. You can only use certain amount of capital. If you put too much, they will die, but that's for another day. And it's not relevant for most people who watch this anyways. Okay, so be very careful with all these commercial EAs. Most of them are losing EAs. If they don't appear to be losing, they will eventually lose because they are based on some of the tricks I have listed earlier, okay? It may be a strategy which takes 10 pips profit, but then has a 200 pip stop loss. So it looks great on your backtest and live, but then in one trade, it will wipe it all out. And this will happen eventually. Don't fall for these things. That's why you need to understand all the components of your strategy, everything, okay? It can't be that, you fall for something like this. I mean, this is dumb money trading if you do that, okay? Or like a bot which is grid-based and just does grid trades and you think this is the best thing since sliced bread until it blows you off. Or a recovery system, I didn't mention that. Stay away from recovery systems, okay? It will work for some time until it doesn't work, and then in one single situation it will blow you. It will happen. It's a certainty. Don't think I will get away with it. You won't get away with it. Maybe you start the whole thing and it immediately blows you out. Come on, save yourself the pain. Save yourself the financial loss. Just because you try to find a shortcut. I have tested all of this over years, okay? I've really, really made my homework. I've tested it all. All kinds of strategies you can imagine. On all pairs, all time frames, all kinds of data. I've tried everything you can imagine. And those kind of strategies, you can even see it if you have a proper setup, how quickly they will just blow you, okay? No recovery systems. Don't fall for it. Don't expose yourself too much to black swan risks. Okay? So, yeah. I recommend you to at least learn something in this area of automated trading. Even if you're a manual trader, I encourage you to look at this. But I want to be honest and fair. It's a multi-year process. It's complicated. You need to have passion for it. If I wouldn't have had the passion for it, I would not have been able to implement that. Okay? And you may feel pretty stupid over 2 years or so where you test and the curve is not stable enough, or the strategy has too many weaknesses or is fragile. Now, for example, in my case, you can see I have a good chance that over the next 6-7 years, maybe even more, I will make good money on those, so I will accordingly, make my choices. But, of course, eventually one of the strategies will die. Yes, that's a natural thing. And I can, either replace it or, deactivate it, etc. But you need to monitor it. You can't just, activate this and go to sleep. That's obvious, no? Every day I'm on the machines anyways for the manual trading, so for me that's a great thing to do by the side, so to speak. Yes? So eventually one of those strategies can die. Hopefully until then, you made enough money to not get out with a net loss. But the cool thing is, no matter whether the markets will be trending or ranging, okay, or whether there will be whipsaws or news moves, whatever, okay, this shouldn't lead to any problems. All this is incorporated in those kind of strategies. There is robustness. That doesn't matter. Only if something more fundamental in the markets would change, I would be careful. And these days, we live in a time of change. You can't rule that out. Look at what crypto did to all the financial markets. Yeah? Maybe in the next 5 to 10 years, Forex will be affected by the whole blockchain revolution in some shape or form. We can't rule it out. It doesn't seem likely right now, but who knows? Things could be changing. Who knows? Maybe my work here changes something. Who knows? Right now, nobody watches it. And I have very few subscribers. But who knows what happens in the future? You see, if there's one certain thing, it is that things change. That's all I can say. But yeah, I love it. I love the process. It was so much fun. I will always do some testing by the side. I think I just love it, even though these are really like the selected ones. In the end, I was so good that I had many good strategies which are profitable, but which didn't make it in the final stage against the best ones. That doesn't mean that those strategies are bad. They are profitable. They may have a bit more drawdown or less trades. Maybe in the future work on them. I'll find a way to improve them and to add them to the portfolio. I can't rule that out neither. Generally speaking, the more the better, you understand? If I maybe find another 4 or 5 strategies in the next 5 years, maybe I add them and have a bit more diversification or even a bit more return. You understand? That's the beauty of it. So if you have a robust approach, you can add and, split the allocated capital again and have a little bit more diversification. Who knows? Maybe you have one day 20 profitable strategies, all doing trades. Maybe you can make between 4 and 8 trades per day and be profitable almost every month. All these things are within reach, yes? And here you can see a good basis, a good foundation for that. But then again, you also can concentrate on the manual trading and just trade those easy money phases and make loads of pips there. And then when markets get more tricky, like the current phase, just drink your coffee and eat popcorn and observe what's going on. When you can't compete with the smart money algos, you understand? Who can move the prices. All right, I talked a lot. I hope you liked it. I had loads of fun today. I'm very proud to show you all this. I will do update videos now and then, maybe every few months, if I feel like it. I've done so before. If you have different questions regarding, creating strategies, this and that, you can use the forum. Okay, I check it now and then. You can post questions, or you can send them via email. They will eventually reach me, and I may, if I have time for this, answer to those questions on the forum or within video if I have time. Something like that. Eventually I respond. Yeah, so all I can say is, no matter how you implement your trades, whether with a bot or semi-bot or manual or purely manual, please make use of the market causality, because that's what the market really does. That's why the price in euro dollar goes up or down, or in dollar yen or pound yen, why it goes up or down. It's all about where are the positions, the stops, the down money tolerance, okay? What's the next target? What's the flow? It's all about that. Everything we do, yeah, whether we approach this reality from a statistical standpoint or a more pure manual standpoint, is our implementation. That's why I always have said, this is a reality. The previous channel was called Forex Reality. This is how Forex is. You see the leading info. And then the way you profit from it, or you protect yourself against nasty hunts, that's your implementation. I have shown you how I did my purely manual trades. You have a big collection of live trades on this channel. They are marked with euro dollar part 1, okay, pound dollar part 2. With the parts, these are live trades, which were immediately recorded and uploaded, as you know. I have shown you a very good win-loss ratio there, by the way, as you know. If you have a job and you still want to trade, but you don't have the time during the day, maybe in the morning before you go to work, you have an hour for yourself, and you tell your bots, look, today only take sell signals in euro dollar, for example, yeah, because the long is in the market, and normally it doesn't change that quickly. If you do it over a long period of time, you have a good chance. If your system is well designed, it will actually work over a time period. You know, the evening you come and maybe you tell your bot stop trading at 6. You come home, how many trades did it work, and so on. You understand? There are many ways. I have explored all of these, as you know, and for me, those 3 approaches, as I've shown, work best. Other people may choose different approaches. Fine. Perfect, good for you. I'm not imposing my own approaches on anyone. Just showing you what worked for me in the end after many years of hard work and dedication. Find your own. Goodbye.